Imagine hitting buy on a chip maker 5 years ago, closing your laptop, and coming back today to find your investment has more than doubled, even after you collected and reinvested every quarterly dividend. That, in a nutshell, is the Marvel technology story. Since mid 2019, holders of Marvel's NASDAQ listed shares, ticker MRVL, have enjoyed a total shareholder return of roughly 108%, comfortably outpacing the broader market and rewarding patient believers in the company's data centric turnaround. To understand why the stock has climbed so far, we need to start with the top line. Over the past half decade, Marvel's revenue has compounded at about 15% per year, driven by a deliberate pivot away from low margin consumer chips and toward infrastructure silicon for cloud data centers, 5G base stations, automotive Ethernet, and custom accelerators. In other words, Marvel positioned itself as an arms dealer for the world's appetite for bandwidth. That growth rate may not sound dazzling against some younger, splashier semiconductor names, but Wall Street values consistency. And Marvel has delivered, quarter after quarter, even through supply chain snarls and an industry correction. Interestingly, the company still isn't profitable on a GAAP basis over the last 12 months, so investors have focused less on earnings per share and more on revenue momentum and the promise of operating leverage once integration costs taper off. When you study the share price chart, you'll notice that the stock's annualized gain, roughly 15% per year, tracks revenue growth almost point for point. That neat symmetry suggests the market sees Marvel's sales trajectory as a credible proxy for eventual earnings power. In semiconductor land, the inflection often comes suddenly. Once gross margins stabilize and R&D spending normalizes, small upticks in revenue can balloon into bottom-line profit. Fresh enthusiasm arrived this spring. The shares popped nearly 10% in the past month alone, a move many analysts attribute to better-than-feared fiscal first-quarter numbers and an upbeat outlook for artificial intelligence networking. In today's market, even a whiff of AI relevance can be rocket fuel, and Marvel happens to supply high-speed optical interconnect and custom ASIC solutions to the hyperscalers racing to wire up AI clusters. While momentum traders debated price targets, long-term holders found comfort in a quieter signal: insider activity. Company filings show directors and senior managers opening their own wallets to buy stock on the open market over the past 12 months. Insider buying doesn't guarantee upside, but it often telegraphs confidence that what management sees in the pipeline hasn't yet been fully appreciated by investors. Dividends may seem incidental in the growth stock arena, but they matter here. Marvel keeps its quarterly payout modest, just a few pennies a share. But when you reinvest those distributions, they add up. In fact, dividends are the main reason the total shareholder return of 108% edges out the pure share price gain of 104%. It's a textbook reminder that yield, however small, can widen the gap over time. Of course, not every chapter reads like a fairy tale. Over the past 12 months, the stock slipped about 4%, even after counting dividends, while the S&P 500 advanced double digits. Rising rates, inventory digestion, and geopolitical jitters around chip supply all weighed on sentiment. Yet, the 5-year view tells a different story. A 16% annualized return, comfortably above the market, achieved without the headline fireworks of a meme stock or a speculative SPAC. So where do we go from here? Bulls point to accelerating demand for cloud and AI infrastructure, an eventual swing to profitability, and the chance that revenue growth could re-accelerate once carrier 5G spending resumes. Bears warn that valuation already discounts much of that upside, and that the semiconductor cycle remains notoriously lumpy. The truth, as always, likely lies somewhere in between. But whether you're considering a new position or simply admiring past performance, Marvel Technology stands as a reminder of what disciplined strategy and steady execution can accomplish in one of the world's most competitive industries. Thanks for watching. If you value deep dives that connect share price moves to real world fundamentals, subscribe for more breakdowns, hit like to support the channel, and drop a comment below with your own take on Marvel's next 5 years. Until the next episode, keep researching and stay invested in what you understand.